in September, we'll celebrate 7 years of work with my co-founder and CTO Thibaut. And so, of course, in 7 years, thank you so much. 7 years means a lot of iteration. It means a lot of smart contract built. And it means also working with a lot of laws, because we saw all the waves of, ICOs, social token, governance token, meme coin, NFTs, like all the things that were hype in crypto until like 6 months ago, when we started to see some form of what they call RWS summer. Basically, when people started to say, hey, actually, let's do real securities on the blockchain. And the world changed at that time. So the first 5 years, 6 years of Fairmint, we barely processed 25 million through our smart contract. But over the last 10 months, we processed more than 1 billion.
Welcome back to Grow and Learn. Today we're opening again the podcast part, which is dedicated to VCs, PE firms, the Capital Playbook. My guest today is Joris Delanoue, founder of Fairmint.com. We're going to be speaking about tokenization of equity of startup companies and growth companies, making them ready to be listed on the stock exchange, making them ready for the future. Hi, welcome, Joris.
Hey, hi Zarina, hi everyone. Super excited to be here with you today.
My pleasure, Joris. Fairmint has been going through quite some change, you mentioned, in the past 5 years. You transitioned from a purely VC raising capital company to what you're doing now, which is asset tokenization. Why the change?
So initially, Fairmint was a lot of R&D around, capital formation. So yes, we raised capital initially, and we've been VC backed since day one. But ultimately, the goal for Fairmint is really bringing equity securities on the blockchain almost since day one. And so, long story short, we saw all the waves in the crypto industry without defocusing ourselves, knowing that yes, it will come, yes, it will be long, and yes, we have to stick to what we are doing to make sure that we make it happen. And it's kind of fantastic to see how today the world is moving on chain, not just on payment transaction and stablecoin, but also on any institutional type of asset. And obviously, the capital market, whether they're private or public, literally understand that there is a new transformation happening. Pretty much the same way as computing happened from paper to computing. And now we feel that yes, going on chain is a new way to have live settlement and all the things that today were a pain that become frictionless on the blockchain technology.
Yeah. So just to explain for the people who are maybe not so aware, there's a difference between tokenizing securities and tokenizing equity, making them a sort of a security as well. What is now security?
Yeah. So on this part, I would say a lot of the work was done over the last months and maybe years to create some form of digital twin on chain, which consists on like, okay, there is the old world, it's off chain. Let's do the twin, but at the end, the bearing value is still in the off chain world. In our case, the way we conceive the protocol, the open cap table protocol, which aim at literally standardizing all the cap table companies of private businesses, and standardizing the way they would issue their shares natively on chain. Well, it gives like a lot more power because the asset itself is on chain.
Yeah.
And from there, if you are, I like to take example for that. But the best one is probably if you invest in a company today, or you are a first employee, you own like something that lies in a PDF that is signed somewhere. In our case, you will custody in your own portfolio that is under the hood a wallet on chain. You will get the shares. You
Yeah.
will get the asset himself directly in your pocket through this portfolio on chain. And I think this is the main and major move to make sure that tomorrow most of the assets are natively on chain.
I see. So we're talking about assets that are already listed on the stock exchange, and or so you, because you mentioned digital twins, like blockchain twins, or are we also talking about companies that are yet to issue that are not listed and
Yeah, so
IPO?
so I would phrase it this way: there is two type of market today for U.S. companies. Of course, the public one that we all know, they IPO, they are on national exchanges, and in that case, they go through the old rails. Okay, they are at the DTCC. The DTCC is the one that is settling everything, but then you have all the intermediaries, the nominees, the custodian, the broker dealers, the national exchanges, and all the platforms. And that's for what exists today for public companies. Some try to tokenize those stocks. Robinhood announced it 2 months ago, and then everyone started to do it as well. X stocks with Kraken. So that's for the public side. And on the private side, not much has been done yet. So we went from paper to digital, but it came with a lot of centralization. There is somewhere a cap table vendor that is literally operating everything, and no one really have a control on that. So right now at Fairmint, we've been very focused on this part because we consider that this private market is anyway the public market of the next 15, 20 years. And so no matter what, the company that will IPO over the next decades are private today. And if we are able to offer them a rail that is better, faster, more transparent, much cheaper, that offer better settlement, and on top of that, that allow them to tap into large pool of investors without going through the other players, then we have a chance to reinvent the way people go public. And doing that, you literally blur the line between the private world and the public world, because that's the beauty of a decentralized ledger technology like blockchain.
Yeah, would there be even a need for an IPO once you have access to all of these liquidity markets? And now talking about all of these liquidity markets, what is the access internationally? I know you operate from the US, but regarding access to liquidity, how does it work when it comes to the SEC regulations and how you access liquidity overseas?
Yeah, so that's a very interesting and major point that you raise. So one, I believe in on-chain IPO. I believe in on-chain SPAC, because we will still need at one point to do some form of liquidity exercise where capital will flow to a vault or whatever the structure to make sure that they support the move of like going public, and that has to be a massive move in terms of cash, because if not, then you will just have like a slowly a move from private to public, but it wouldn't be a big splash, and we need that. That said, when you mentioned the pool of liquidity, well, I think today the pool of liquidity are in all the ecosystem over the world, whether they are on chain or off chain, whether they are on Ethereum and all the EVMs or on any other layer one, whether they are in the end of a small broker dealer operating in one state in the US or in a big firm in Asia. You want to make sure that tomorrow you are able to tap in induce pool of liquidity. That's a premise also of national exchanges. When you do an IPO, they go after, all the investment bank go after all the capital they can over the world, funnel that through you, and the day of the IPO, you get a lot of cash right away. The big problem today is that price discovery sucks. We saw it with Circle, we saw it with Figma, and we need to offer some form of a better price discovery when it comes to going live or going public. The second thing is the best rails to access and tap into this large pool of liquidity so far has been DeFi. And the decentralized finance is not regulated today, most of it.
Is this the way to circumvent SEC regulations for overseas capital?
Well, I advocate for regulated DeFi. What do I mean by that? Basically, yeah, because it's often like, are you associating these two words? And I'm like, yeah, actually, we do securities. So we need to comply with the US securities law no matter what.
Okay.
And rather than to try to avoid things going offshore and excluding the US, I'm more into pushing for a better rail, but that is regulated, which means having maybe a broker dealer that use the smart contract that plug all those assets to DeFi, but without letting anyone do whatever they want. So it comes with the full automation with smart contract. You can have transfer restriction that are automated. You can have a very easy way to monitor if the person that is selling or staking or lending, if she's compliant with the US securities laws, what's the tax residency, what's the AML associated to the person, and of course the recipient. Is the recipient able to participate in this transaction? And all that is done through regulated agent, broker dealers on one end, and transfer agent on the other end to make sure that the cap table of the company is always up to date and is always verified. And so we've been working and advocating for that. I sent a written input to the SEC Crypto Task Force a couple of months ago, was invited last week at a roundtable with the SEC Commissioner, Esther Pierce, and some members of the Crypto Task Force, precisely to share more about this. Because if we are able to do that, we guarantee investor protection, which is fundamental in what we do for securities, and we just plug the securities world with the composability of decentralized finance, which I think is the most powerful move that we can offer to the market. And rather than to do that as a walled garden, which is what a lot of Web2 players were trying to do, I believe in an open standard. I believe in a way where the source of truth is not owned by a company, but is defended by a standard that the industry can rely on. And if we do that, we answer one of the major issues that we see today with the tokenized stock of public company, which is the fragmentation of liquidity. Why do I say that? Well, if you are in Asia or in Europe and you get share in a company from X stocks on Kraken, you won't be able to sell that to anyone else because it is a walled garden market, and you won't be able to do that. So you create a small pool of liquidity somewhere for a small part of a specific company that lies on Kraken. But what if we were able to say to Kraken, look, this is the asset, this is the source of truth. You set your own rules with your own perimeter, but the update is directly done at the top layer, which is the cap table, the source of truth. I mean, by doing that, you are simplifying things, and you are guaranteeing also for the investors that they truly own the asset without misguiding them.
Yeah. So it practically works like a cryptocurrency. The way cryptocurrency is in a way sold in different exchanges. You're describing a similar process.
Yeah, except it's a security, so it comes with all the safeguard that a security needs. But yes, the idea is to say this is what works with cryptocurrencies. This is what we need to do pretty much the same with securities. Let's take the best of both worlds, automate that, and offer the best experience for both the issuers, the people operating the trade, and of course the investor, the shareholder, the stakeholders at large.
Mm-hmm. Joris, do you already have companies using this service, or are you in the process of development of what you're talking about?
No, so next week in September we'll celebrate 7 years of work with my co-founder and CTO Thibaut. And so, of course, in 7 years, thank you so much. 7 years means a lot of iteration. It means a lot of smart contract built, and it means also working with a lot of laws, because we saw all the waves of ICOs, social token, governance token, meme coin, NFTs, like all the things that were hype in crypto until like 6 months ago, when we started to see some form of what they call RWS summer. Basically, when people started to say, hey, actually, let's do real securities on the blockchain. And the world changed at that time. So the first 5 years, 6 years of Fairmint, we barely processed 25 million through our smart contract. But over the last 10 months, we processed more than 1 billion.
Oh, wow.
And it's growing like literally week after week. I without teasing anything, I know that we will be much higher in a couple of months, and I think it's great. It's fantastic to see that there is no more reputational risk to work with us, because before we were too regulated for crypto people. They wanted to do just cryptocurrencies, and we were too crypto friendly for institutionals. They were scared of being associated with any public chain. So I think this is the risk that is gone. That makes both sides now like knocking at the door saying, hey, can we do something better with you guys? And we are here building the rails for years, offering those rails now to the industry to make sure that we are able to bring as much equity on chain as we can. And hopefully we'll hit the 100 billion in the next couple of years.
Yeah. So who is your typical client? What stage are they at? You said pre-IPO, but still, are they just
So I would say that our customers, it's a real spectrum. It goes from early stage company that will raise their first angel round to Series E companies that are unicorn, already raised like multiple round of fundraising from top asset manager and VC firm, and that consider very large tender offer or even IPO. It's pretty broad, because like I keep saying to people, we build the rails, and it's a matter of like when you feel that those rails are a fit for you. And I would say early stage company come for the easiness of using us, and later stage company come for the premise of DeFi composability for their company.
So when it comes to early stage, is your access to institutional investors or to markets for, I don't know, are they called liquidity markets? Are you helping them in any way access investors, or is it that they just have another possibility to market to smaller cap investors?
Yeah, so we it's the latter. We let them. We are the tech provider. We offer them the rails to make it very smooth for them to onboard investor that they decide to invite, and then they will leverage the different exemptions that the SEC allow them to use in the state. So some offering will be extremely private, reserved to just a few people that they decide to use. Some will decide to go through a more general solicitation approach, where they tap into a broader range of community members of themselves. But ultimately, Fairmint today is here to guarantee that whoever is onboarded to their cap table fit in the compliance flow that them as an issuer need to respect to be compliant with the US securities laws.
Mm-hmm. And what is the approximate cost to a company willing to tokenize their equity?
So we have basically an admin fee to onboard the company, the cap table, depending on how late the stage is for the company, how many people they have, and then it's basically a subscription today. But the goal is to get rid of the subscription model and focus on whatever happened after, which is like when there is a move. The only thing is to be able to do that type of business in the States, it's a regulated activity that needs to be done with a broker-dealer license. And so far with Fairmint, we wanted to make sure that we were able to build the tech, have the issuer using it, leveraging it, before that we would apply to become a broker-dealer ourselves, to make sure that we were not, in the position of so many other players that raised hundreds of millions of dollars, got all the licenses, but when it come to have some business through their flows, nothing happened. So we did the exact opposite. We said, hey, let's build the flows. Let's build a pipe. It's like being a plumber, and the day we are able to get the water in the plumbing, then we'll be able to take our fee by becoming a broker dealer. And we are at this phase where now there is water flowing through the pipes, and we want to make sure that we get our cut out of it by becoming ourselves a BD.
Yeah. And until now, it was the companies working with a broker dealer.
No, we didn't have to, because we were never interacting in the trade. We were never facilitating any transaction. We were literally just a tech provider. So we were very careful for all those years to never step in this role that would trigger the broker license. But it has been an extremely good experience in a way, because it made us like literally ahead of most of the market, ahead of whatever is coming, what's the trend. And for example, when I wrote the written input to the SEC Crypto Task Force, it wasn't just a vision. It was like the clear reality of, okay, we've been building for 7 years. This is the next step that we need to make sure that the 1 billion can become 100 billion or even a trillion, you see?
Yeah, I see. So what does your broker license, what would it allow you to do that you're not doing at the moment?
Well, one, it will allow us to verify investor ourselves. Today, it's done by the issuer themselves. Two, it will allow us to present and match investor with project. This is something that we were not able to do, and I have to share, for all those years, a lot of companies went to other solution because they didn't find with us any pool of investors. But we've never stopped to believe that that was the right play, and I still believe in that. And of course, the main part is that for all those activities, we will be able to have a transaction fee, which is today, when you think about it, like issuing $1 billion and getting like 5K out of that is pretty low,
Yeah.
But the moment that we are licensed, we will be able to effectively get our own cut. And even if we work with another broker dealer, we will be able, in that case, to get a referral fee from the BD based on the transaction fee that he gets, which is still not possible today without the license. So it's a big unlocker for us. But at the same time, we wanted to make sure that we would do it in a way that makes sense, and when we were effectively ready, when the market were ready. And part of my letter to the SEC highlight this idea of what is a broker dealer, what is a transfer agent in the blockchain era, because you don't need to custody things.
Mm-hmm.
So do you need to go through the exact same um, compliance rules and all the things when you don't have like the most critical part, which is the custody?
Mm-hmm.
And so I push this idea of non-custodial broker dealer, and all
Yeah.
Fairmint team is pushing for this idea. And what's fantastic is that I think the SEC is currently working on something that they would lean to call like a light mode broker dealer,
Mm-hmm.
literally a version of a regulated agent for the blockchain era. Um,
Mm-hmm.
so we are very lucky to see how the regulators today are working together with the industry to um, try to offer a solution, um, with, of course, all the arbitrage that they need to do, but they keep investor protection at stake while letting the industry um, move forward and probably let the US become the top market in the crypto industry over the world.
Yeah. So how do you see the evolution of the players? Now you're talking about like the light version of a broker license. Then we have the technology part that you're currently doing. Uh, what other players would be evolving or changing as we go forward?
Well, my big bet is um, Coinbase, Kraken, Binance, Crypto.com, Gemini, even maybe Fidelity, Robinhood. I think all those players will become the place where you want to be listed,
Mm-hmm.
and where, as a founder or board, you will start to think like, okay, where do I want to be in 10 years? And maybe even in 3 years or in 1 year. And I think that the biggest shift will come from those players that today operate like, either full crypto, so there is no securities, or they try to do their own securities by creating their own walled garden internally on chain.
Yeah.
Um, I think those players, they will move way upper to go and capture the market where it is today, which is the private one. And I think they will go from like secondary things to like more the primary issuance, or being able to connect with the primary issuance, managing the whole issuance, so that whenever the company, the entity, the group of people are ready for more public play, boom, they are already exclusively maybe on their platform.
Mm-hmm.
I think this is the biggest move that we'll see, and I expect to see regulated DeFi becoming so big that tomorrow you will have, I don't know, the Solana broker dealer, the Avalanche broker dealer, the Base broker dealer, like all those players will try to tap into their own ecosystem and leverage the pool of liquidity, the pool of investors that exist in their ecosystem, but without compromising with the regulation. Um, so yeah, I think those big players will move like very very fast, way faster than we expect.
Mm-hmm. You're talking about a walled garden regarding these exchanges, but how about geographically? Because currently, clearly you'd have to comply to the SEC in Europe as well. You comply to different jurisdictions. How do you see things developing in the future? Would these companies be accessible everywhere on Coinbase, or would they be again restricted to the US market or?
Well, same. I think we will see a borderless world of securities.
Mm,
I think the whole world of securities will move. The I won't. I don't like to say that the SEC is a bit like the regulator of the world, but to be honest, this is a bit what's happening. Everyone is waiting for now on what will happen with the SEC. We see a lot of projects that went offshore coming back to the US right now.
mhm,
We see a will to go super fast with the new administration because they don't know what will happen after. So I think they will want to go super, super far. to precisely take over this world. And I think the moment that you hit Robinhood or Coinbase or any other big player like that start to have like a worldwide and borderless type of network, there is it would be very, very hard to restrict that to the US only. And the world wants to access to those assets. That's why X stocks and Robinhood tokenized stocks are working, because a lot of the people want to tap into the US market, but they can't if they're abroad. I think the on-chain play and the rails that we've been building are precisely made to be borderless. And as we automate the compliance, it's very easy in that case to just rule everyone through a US exemption.
Mm-hmm.
And this automation is also key to make it happen for a borderless world of securities. So I think it would be 24/7 and borderless.
Yeah. Well, I think now about 1.5, 2 years ago, there was a lot of talk about asset tokenization by Larry Fink. This is when they formally, BlackRock announced asset tokenization. What is their role, and how would you fit in their world? I mean, clearly they in a way own the world. So what is their play in asset tokenization, and how would you fit in?
So in their case, they are a lot more on the money play, like the fund administration, ETFs and all the things. So they're not yet in the pure stocks play. But I know that they do some work with other companies that are a walled garden. And I think this is where at one point it will be too tiny. It will be too, it will lack the interoperability to be able to tap into like the worldwide pool of liquidity. And so what I envision is more like a world where they will look for interoperability. They will look for borderless things. They will look for more open solution to move to the next stage. And I also think that the securities, the stocks that we are working on right now, this is still very early for going on chain. So it will evolve a lot in the next 5, maybe 10 years. Because on one end, there is the old world that is fully off chain, barely digitalized sometimes. The DTCC still have and store a lot of paper shares of a lot of companies in their building in Manhattan. So when you think about it in 2025, it sounds like, oh my God, like, yeah, I better understand why it takes them days to do settlement. So there is a huge gap between those companies that are running today completely off chain and the new one where we offer them the ability to issue on chain immediately. BlackRock, they are massive. They are able to create trends, but the industry they are in right now is still still a bit far from the stock themselves. But I have no doubt that as soon as they see the opportunity, they will start to move on it as well.
And looking forward, do you see any dangers or something that we should be careful about? I mean, clearly there's a big opportunity there, but what are some drawbacks of this entire shift?
Well, I think the risk is really like doing DeFi without regulation, because a security means there is investor protection, and this investor protection is enforced by law. So the specification for whatever you build, it's already written in the securities laws. So, and I like to say at Fairmint, we didn't try to innovate for innovating. We literally worked to make sure that our understanding of those securities laws would become the specification of what we are building. and to the point where we want it to be broad enough and open enough for any other player to rely on those. Um, the main risk is, I think, if someone tomorrow comes and say, "Hey, let's take Uniswap and now we trade the shares of these private companies directly on Uniswap," and you might end up with an issuer that has a Lazarus group on their cap table that take a lot of liabilities when it shouldn't happen. And so that's why I advocate for some form of regulated DeFi to make sure that we put in the game the right safeguard to guarantee the protection of investors and to guarantee also the role of the issuer himself. Because when you are a small company, maybe you don't care. Okay, you are just you and your co-founder. You start, you are like, okay, let's take the money. But when you start to get big, when you start to have things at stake, when you start to align multiple investors, fund, hedge fund, or VC firm, and large angels to the table, that's when you want to make sure that you respect your fiduciary duty. And as a founder, you want to go where you feel comfortable. And that's why a lot of the customers of ours are coming to us today. Either the lawyer says to them, "Hey, you want to do on-chain play? Okay, but do it with the rules, go Fairmint." Sometimes it's the founder himself. He's like, "I believe that soon I will IPO, but I want to make sure that I do it on Coinbase. And maybe you are the best bet to do that." So they come. So to look back on your question on the risk, I think the main risk today is letting things happen without the right level of protection, or trying to create condition for a too permissive framework that would literally bring us back 10 years before, when people were doing, like shitty stuff. And I think that right now the regulator is working on this. I also think that we can leverage the technology, the blockchain technology, to avoid that, or to offer some form of guarantee with something that I call the observer nodes. It's the idea that on the blockchain, with whatever the chain, we should start to see players that don't just analyze the data, but that also are able to do some basic compliance part, that are able to observe things and notice violation, to continue this idea of protection for investors. I think this is a big play to come, and this will be a big business, because a lot of the issuers, regulated agent, would pay for that.
You mean when they're listed that there's an inbuilt smart contract, but this is anyhow being done, as you mentioned. You're doing this at the moment, right?
Yeah. So depending on the nature of the company, whether it's private or public, if it's private, you want to keep privacy. So you will lean to go through privacy solution, whether it's on blockchain like Kenton or any other more privacy enabled architecture chain, or you will go on a public chain, but you will try to rely on protocol that will guarantee the privacy, like ZK, like FHE style, and so basically, in that case, it's very hard to observe. There will be opacity. So I think that one of the best way to avoid that, and to still offer some form of pragmatic observing, you will be able to do that with special companies. They won't be the regulator themselves. It could, but they will mostly be, data provider. They sniff things, and they will be able then to identify things and maybe report that to the issuer, to the tokenization platform, or even to the regulator himself. I think this is a very strong way to offer also guarantee for institutionals to come on chain, because they don't want everything to be public, but but at the same time, we want some form of accountability when they decide to go on chain.
Mhm. Fairmint, the beginning of the end of the stock market.
Well, I like to say we can say let's reinvent going public by going on chain.
Yeah.
You know.
It was such a pleasure speaking to you, Joris. Anything else that you'd like to add? How can people get a hold of you and explore if they could get listed on blockchain?
So they can obviously contact me on Twitter, Telegram, or write to us directly on fairmint.com. They will find all the contact. And yeah, super happy to chat with any founder, any visioner, and anyone that wants to support this idea that the capital market should move on chain. So yeah, happy to chat about that. As you can see, this is something that keeps me awake at night.
Lovely speaking to you. Thank you so much.
Thank you, Zarina.